Computer, okay. Yay, okay. Now let me share my screen. Yeah. So, thank you all for joining. I know Chris and Paula, and I just met Rob. But my name is Lena Riscala. I'm a financial advisor, and I work with Conte Wealth Advisors. I work in the New York City and Hudson Valley area, and I have been in the industry for about 20 years. I worked with various companies doing like writing, speaking, presenting on financial planning, retirement, tax strategies, estate planning, etc. And now I work as an advisor, and I work with women, I work with small business owners, and I also work with financial, like just regular professionals who are trying to put a plan in place and kind of and go towards those goals. So what I want to do today is like just kind of go through the CARES Act, and I'll give you a quick economic update if you guys would be interested in that. Just
Sure.
to start with. I'm going to start with my, okay. So just to start with kind of a quick and dirty, like what's been going on. I think like it's hard to believe that it's just been a month of this social
Yeah.
distancing. It's crazy that it feels like it's been forever, and it feels like it's been one long Sunday. But it's been about a month, and you know, they put this in place because it was important to do social distancing to stop the outbreak and to control the spread. But you know, in the same time, while they're trying to deal with the public health issue, they also basically, the government or this policy decision basically created a recession that we're in right now. And I think it's very unusual and noteworthy to say this because other recessions in the past, I think a lot of us still have PTSD from like the 2007, 2008 Great Recession from about 12 years ago or so. But that was definitely a very different recession. That was a recession that was made by, you know, failure of banks, failure of the government to protect individuals, a housing bubble and a bust. So there was a lot of reasons for that one, and it was very widespread, and it lasted a long time. This is going to be a different recession. This is a recession that's caused by a policy decision to keep people in their houses, which, you know, made people like work from homes. Businesses had to make some tough decisions like shutting down or laying off workers. And as a result, we've really seen the economy rocked. Like number one, we saw unemployment go from a month ago, 200,000 claims, to the next week it was 3.3 million, to the next week it was 6.5 million, and this week the new unemployment claims was about 7.5 million. So today we have about 16 million Americans that are not working, and that's very lowballing it because there's a lot of people that are very frustrated with the unemployment systems and the Department of Labor's in their states that can't get on, that haven't been able to claim. So we're going to see a lot more people filing for unemployment. The market, it was the quickest decline into a bear market that we've ever had. Usually it takes weeks and maybe even months for the market to start tumbling 20% down from its peak. This took just a matter of days for the market to go from February 19th peak to minus 25 or minus 30%. So we've seen a huge change in the market, although it's come back. And in fact, this week I was reading somewhere that the market has had its best week since 1974. So it doesn't feel like it, but that's the case. And then in terms of like just the greater economy, the GDP or gross domestic product, which is the value of goods and services that a country produces during a specific period of time. You know, we're entering a kind of slower growth period, even in January when we had really good ideas for the rest of the year. The growth projection was maybe 2%, but for Q1 it was about 1%, and most economists are expecting negative double digits for second quarter and third quarter, and that's to be expected, right? I mean, these unemployment numbers, the GDP numbers, we're expecting those to be very, very extremely dire because nobody, like, people are working, and then also businesses are closed. So that's kind of to be expected. And so as a result, like, what does the rebound look like? a lot of people, well, in the beginning, people were thinking, wow, it's going to be a V-shaped recovery, right? So we're going to be here on February 19th. We're going to plummet down very quickly to a bottom. We're going to see the market bottom. We're going to see these stimulus, everything start getting into play. And then we're going to shoot right back up, because all of the other economic indicators before we entered this, time in our lives were really, really good. But so far that hasn't happened. And I think what people are saying now is that it's going to look like a U-shaped recovery. So we're up here, and then we kind of start heading towards the bottom. No one's really sure, are we at the bottom? We go up, we go down, blah, blah, blah. And then we start seeing some of the stimulus make an impact in the economy going forward. So not an immediate impact, but maybe eventually, probably by the third quarter, probably by the summer, we'll see all of the stimulus money getting into the hands of people and businesses and corporations, and we'll start seeing the economy start chugging along a little bit more quickly. So people are hoping for a U. One side note is that it could be a W, which means that it'll be a double dip recession. And that would happen if, say, the social distancing doesn't work, right? So this keeps going on, and like we get all these false bottoms and it keeps going on, or the social distancing does work initially and then everybody gets sloppy or the vaccine or the treatment just keeps getting delayed, and we get another outbreak, say in the fall or something like that. So you get that W. Hopefully it's a U, or like a very sharp U, and hopefully we'll start seeing. And a lot of the economists, again, when I get on these market calls, I definitely hear from them that that they're expecting a lot more growth and just better times in the latter half of this year, and into 2021. So again, yes, we're in a recession. It feels really, really horrible and uncertain because it's been such a drastic change since even a month ago. But it's supposed to be short-lived, and the recovery should be pretty vibrant as we kind of start getting out of this. That's kind of hopefully the good news. The other good news is that when this happened, when this outbreak happened, and when they started implementing social distancing, businesses closed down, both the Fed and the government acted very quickly, and really like surprisingly quickly. We know the Fed cut interest rates to almost 0%. They started quantitative easing, which helped get money, credit into banks, and they'll able to lend more. And then the government passed the largest piece of legislation in terms of stimulus since World War II. World War II wasn't a stimulus, it was just a lot of government spending. This package it comes in second, $2.2 trillion, which is about 10% of GDP. So it's really a substantial, huge amount. If you compare that with, say, the Great Recession of 2008, there was, it took Obama months to get this stimulus package passed, and it was about $800 billion. It was like a huge deal back then. This is obviously, you could see by the size of it, a lot bigger and probably just substantial because it was just necessary. And it really pushes money to all the different corners of our economy, right? To large corporations, to the hospitality industry, to the airline industry, to about $350 billion to small businesses, to states, direct payments, and that's in the rebate, which I'll explain in a second, to extend unemployment. So right now, each state governs their own unemployment and kind of calculates your benefit and eligibility and how long you get it. The federal government's going to come in and shore it up and help extend it in different ways, and then to the healthcare system. So pretty substantial stimulus package. And I'll get into, who does it cover? It covers individuals, families in different ways, like on an individual basis, on a family basis. It covers student debt, and also retirees and retirement plans, better access to those if you need them. And then also for small businesses. And just keep in mind that you have until July 15th, if you don't know this already, because I know we're about 5 days away from like the official April 15th tax filing deadline. You actually have an extension to file and pay your taxes by July 15th. And that also includes if you're going to make IRA contributions, year-end contributions, you have until July 15th to do that. So if you haven't made a Roth or an IRA contribution, $6,000 for people under 50, and I think it's $7,000 for people 50 and over, you can do that by July 15th for last year. So for individuals and families, I'll just go over the rebate check really quickly. This is basically a cash that goes right to each individual that qualifies. So for individual, it's a $1,200 check that's mailed or direct deposited to you. And you have to, in order to qualify, there's an income threshold. So if you make $75,000 or under $75,000, you'll receive 100% of that rebate, right? So you make $70,000 and you filed your taxes for 2018 or 2019 and you use direct deposit, they have that information for you, then government's going to go through and basically say, yep, this person, this is their AGI. They're going to basically direct deposit or mail you a check for $1,200. So if you're married, 1,200 times 2 is 2,400. If you have a child, a dependent that's under 18 that lives with you and you claim them as a dependent, it's $500 per child. But note that it's a phase out. So if you make more than $75,000, you could still get a part of that rebate up until you earn $99,000. So if you earn more than $99,000, you will get 0% of the rebate. If you make $99,000 or less, or $75,000 to $99,000, you'll get some part, but not 100% of it. And if you make less than $75,000, you'll get 100%. And if you collect Social Security, you're eligible, you don't have to do anything. And really, you don't have to do anything to get this, whether you're somebody collecting Social Security or just an individual who filed taxes. What the IRS is gonna do is look at your most recent tax filing to determine if you're eligible and how to make that payment. So again, what I've been reading, again, this legislation was passed 2 weeks ago, and what they do is Congress basically like throws up on legislation, pushes it through. This president probably doesn't even read it, and he signs it, and it's done. And then they leave it to the government agencies to interpret the law and to create rules. So this is kind of being put together. And in order to get it, what I've been hearing is the fastest way to get it is if you file and you get direct deposit in your tax returns. If you just leave check information or you have you only get checks, it's probably going to take a little bit longer to receive that check in the mail, but you should get it. So just to give you an example of how this works, on the left-hand side, you have married filing jointly. You have Rima and Josh are a married couple, and together they earn $144,000 jointly. So if you're a married couple, the threshold begins at $150,000 and it ends at $198,000. So it's $150,000 to $198,000. So if you earn under $150,000, both spouses will be able to receive the full $1,200 rebate check. Plus they have 2 children, Laith and Zane, who are dependents. So they each get $500 for each dependent. So they will in total will receive $3,400 in whatever direct deposit account they use for their taxes. On the other side, Layla is single. She earns $85,000. That is more than the $75,000 beginning threshold. So it's about $10,000 more. So she's going to apply how you apply the phase out is for every $1,000 that she earns over $75,000, she gets $50 taken out of her rebate check. So in total, she'll be able to receive $700 of that rebate. I hope that makes sense.
Yep.
Okay, great. I'm going to go on. Unemployment. What they've done here is they've expanded who is eligible, right? They've also expanded how much you can receive, and they've also expanded how long you can receive it. So there's a lot of help. There's a lot of shoring up of unemployment that the federal government provided. Who's eligible? It's the regular people that generally can receive unemployment. So individuals already eligible to receive before the CARES Act can still receive it, and they can receive it with the new pandemic provisions. But it's also extended to independent contractors, sole proprietors, and gig workers. So these are people that are generally under normal circumstances wouldn't necessarily be eligible to receive unemployment insurance, but now they are able to do so. Even some part-time workers are able to apply for that. So if you are in that category, something to look into. How much can you receive? The state benefits. So I think all of us are in New York. I think it's the max is $504. If you're in New Jersey, it's like a little bit more, and Connecticut it's a little bit less. But you get the state benefit, and on top of that, you get an additional $600 automatically added to your weekly benefit. So it's a pretty generous amount. And I've read some, all these different articles about like, it's not fair, it's not enough, or it's too much or whatever. But I always consider like, listen, if you're losing your job, you're also losing your health insurance. So it's really important to be able to afford that as well. I think it's another way also for people to spend a little bit more. So if you naturally earn a little bit less per week and you're getting a little bit more with this bumped up insurance unemployment, it's probably an incentive to kind of contribute a little bit to the economy and get that starting to kind of get stimulated as well. And then how long you can receive it, the average is, or the norm is 26 weeks, but under the CARES Act, you get an additional 13 weeks. So you can receive unemployment up to 39 weeks total. So again, hopefully it's not going to last. This recession won't last for whatever, but it could. And if that's the case, these are the provisions that we get. The way to apply is you just go to your state Department of Labor website for unemployment. I know that the New York State, as all the states, have been having a really hard time managing this. I know New York State as well has been just really difficult to get through. If you start your claim online and then they ask you to call an 800 number and then you're on hold for 3 hours and you get hung up on, it's been a real disaster for a lot of people for weeks. And if you're kind of in that case, I know that they added a bunch of servers and they added a bunch of additional employees to kind of process these claims and get through them. They rebooted the system yesterday, and I think what they're doing now is if you started a claim and you had to call in to finish it, I believe what they're doing is they're going to call you. We'll see if that happens for a lot of people. And another piece of just information, there's a Facebook group for people that have filed for unemployment and unable to get through that gives you a lot of information. I don't know what the name is, but you could just Google like New York unemployment insurance Facebook complain or something like that, and you should hopefully get to them. And they, like, I go on there just to check and see like what kind of resources do they provide, but they're really on top of it. So if you're having a problem with that, definitely reach out to that group. Student loans is provided for deferring student loans, and they must be federal loans only. So if you have a, let me find my notes for that. I think it's a Perkins loans, federal family education loans, a direct loan, anything that's a federal loan is deferrable up to 6 months. So that includes it's suspended as well as the interest to zero. So you won't need to pay that loan for the next 6 months until about September 30th. You don't need to do anything about it. Lenders have already been instructed to suspend those payments. So you might be receiving like a statement, but you won't have to pay nothing will be due until after September 30th. Now, if you're in retirement or if you have a retirement account and you're feeling like you need to maybe tap some of those accounts to get you through some of these hard times, there's a couple provisions in there as well. So one of them is for people that are affected by COVID. So that means if you've had the virus, a family member's had it, and you need to take care of them, your downsized, whatever the case may be, you'll be able to take money out of your IRA or 401k without paying a 10% penalty if you're under 59 and a half. So there is that rule that if you're taking money out of your retirement accounts and you don't fit any of the exceptions and you're under 59 and a half, you'll have to pay a 10% penalty plus income tax on that withdrawal. So for people, COVID-related reasons, and you're under 59, you're able to take that money out. You just have to pay ordinary income tax on it, but you don't have to pay the 10% penalty. And as far as the tax on the withdrawal, that can be spread over 3 years. So say you need $20,000, you take it out of your IRA, you're 45 years old, you don't need to pay the 10% penalty, and say you owe $5,000 in taxes, you could spread that tax liability over the next 3 years. So it's not a big whammy when you file for taxes in 2020. And then similarly, if you want to replace that contribution, that amount that you're taking out, you have 3 years. Even if we have how they have those annual caps of like contributing to a Roth or an IRA or a 401k, they're capped. You can make that cap and then make an additional amount to cover the amount that you are taking out of your 401k today. So I hope that's clear.
Excuse me, how long will that be applicable?
That is, how long will that be? I think it's through this year. I think it's through the end of the
year.
Yep. Yep. So, so something definitely to keep in mind if it's something that you they do this, I think, every recession. They kind of open up the restrictions of tapping into your 401k and retirement plans. But you know, make sure this is a last resort if possible, because it is really hard to replace it. You know, it may not be, but for a lot of people, it could be something that they don't replace later on. So if you can replace it, if you can reach for other resources, that's probably the first bet. But it's always great to know that this is available to you and you're able to spread the tax over 3 years and be able to tap into that when you really need it most. They've also doubled the allowable loan from 401ks. So under normal circumstances, you can take the lesser of $50,000 or 50% of your 401k balance as a loan. But now they've expanded it to $100,000 or 100%. Again, with loans, those are tough to make up as well. So let this be a last resort. If you took a loan out and you owed it in 2020, that actually is going to be deferred for 2021. So you won't have to pay that loan back that you've already taken out in previous years. And then finally, if you have to take an RMD and a required minimum distribution, even if it's an inherited account or your own account, you don't have to take it this year. And I've also heard that people that already took their RMD in, say, January, February, March, you can give that back. So you have 60 days from the day that you take your distribution out to pay it back. And the reason for this is, like, account values were high in December and January. Well, in December is when you look at the value of the account. So RMDs are based off of a higher value of your 401k at the time that you took the amount out. Now a lot of 401ks are down, and all of a sudden you have all this money that you're like, I can use it, but I don't want my account value to be so low. You can put it back in within 60 days. So just call your employer, HR, your advisor that you work with, or a bank to put this in place. Let's get into small business owner. There's a lot of work that they've done on expanding SBA loans, Small Business Association loans. They created a Paycheck protection program that helps small businesses shore up their own businesses and get through these tough times. Really, a lot of work has been done. I will say that there's been a lot of frustration for a lot of small business owners, similar to people that are trying to apply for unemployment. The system is completely bogged down. The applications were opened, I think, a week ago today. So in a week, they've had, I'm trying to find in my notes, they had about $250 billion, 250 million, I think, applications. So it's been, wait, let me just double check. I don't want to lie to you. I know I took some really good notes just now, but let me see where it is. Okay, sorry. 50,000 small businesses have applied in 1 week. And today, if you're an independent contractor, a gig worker, an independent contractor or a sole proprietor, today is the first day that you can apply for this as well. So I'll get into it just so I can make it clear. So the Paycheck Protection Program, designed as a forgivable loan for small business owners. And again, beginning today, that also includes sole proprietors and small business owners, independent contractors can also apply for this. It's really meant for those businesses to keep employees on the payroll and also cover some business expenses through June 30th, 2020. You would apply under the SBA.gov. I'll give you the email in a second, or the website in a second. It's the lenders are usual that provide this are SBA 7A lenders, and also your bank, your credit unions, your community banks. I'll say too that over the past week, what we found is the bigger banks were just inundated and bogged down and not as nimble, I think, as the smaller community banks. So if you're interested in going for this as a loan, I would recommend, if you have any type of relationship with a credit union, a community bank, for some reason they're able to get these applications processed more, I guess, expeditiously than a Citibank or a JP or a Chase or any of that for whatever reason. So go for those if you can. who's eligible for these? Businesses with fewer than 500 workers. Again, I said includes sole proprietors, independent contractors, private nonprofits, and also hospitality businesses. If you have a restaurant with multiple locations, you can also apply based on the location and the employees that work at that location. The loan is supposed to cover about 75% payroll and wages. So 75% of the loan must cover payroll and wages of employees. The rest of that can cover utilities, rent, mortgage interest, but not mortgage premium, like costs for sick leave, medical leave, healthcare premiums, etc. So the focus of this program is really to make sure that employees are not let go, that you keep them on your books and you keep paying them through June 30th. And then after that, you have 25% of that loan can also be covering other expenses. And if that's the case, then that loan will be forgiven, which is really, again, pretty amazing. But again, it's dependent on headcount, and it's dependent on, like, if you reduce, I got some other notes that were really good. I'll just look at where I was looking. It was very good. Okay. Doesn't matter. So, and also know that it's limited to $100,000 per person in terms of compensation. So if you make $150,000, or if you have two employees that make $150,000 each, you can include them up to $100,000 of compensation. So that loan won't include the additional $50,000 that they make. And it's also based on, you're going to look at the 12-month average monthly expenses, and that's calendar year, 12-month calendar year, or 12 months from February 15th. You look at the total expenses, including payroll, insurance, taxes, rent, etc., divide it by 12, and then you multiply it by 2.5, and that's generally the amount of the loan that you could ask for. And again, if you do all things right, it'll just basically be like a grant. It'll be a forgivable loan. And if it's 75% of it covers workers, that you retain them through June 30th, that you don't decrease their salary by more than 25%, and then that they don't make more than $100,000. So you can't cover more than $100,000 of that compensation. Again, it's a great program. There is a huge line. It's about $349 billion that the government made available to that. So the big fear is that people are going to apply and run out of that. But there is legislation in Congress now that they're talking about to provide an additional $250 billion to this program and to other SBA loans, just to help shore up the small businesses and get them through this tough time.
Do you know timing on that? Like, if I already filled out that application.
Yeah.
I don't even remember when that was. Do you know timing on that, when they're supposed to be?
When they're going to decide. So it depends on your bank. Again, like if it's a bigger bank, they're probably going to take a longer time. It is a queue. So the sooner you get in, the sooner you'll get your funds. Right. But because like the law was passed 2 weeks ago, a week ago, April 3rd was the first day you could apply for it. But it wasn't until, I would say, Monday or Tuesday that banks actually got regulations and instructions on how to handle the applications. So you could see that it was like the chicken before the egg. Right. So there is, there's the system is bogged down now, but I think eventually as they're getting more clarity, and they're getting more clarity every day, they're able to go through the application. So I wish I could say for sure. If I find out, Paula, I'll let you know. I'll see, because I was just on this noon, they had a really good small business town hall with the American Chamber of Commerce. It was really excellent. It was really kind of giving you the nitty gritty. So I'll keep on track of that. Okay. Yeah.
So I got a quick question, if I could jump in. So I have a small business. I'm an LLC.
Yep.
I got stopped with that loan, with that application where the payroll part was, because this is what my accountant told me. Was my problem was that I don't pay myself a salary. Mm-hmm. So I have no payroll at all. And the money just goes back into the business pays for everything, and I have zero. So when it got to the point of, how much payroll was, mm-hmm. I couldn't answer that question. Yeah. And it said that, you have to prove it. So you have to have a W-2, you have to have,
Yeah.
you know, if you're a sole proprietor and you know, you have W-2s or 1099s, and that's certainly a way to be able to prove income. But because I don't take any salary from the business, and I
How
just
do you
let the
prove your
business,
income?
how do I prove it? Because I get Social Security, so that's what I live on, my Social
Yep.
Security.
Yep.
And the business
So-
pays for everything else.
Yep. So there's no clear answer to that. That question did come up. There's no clear answer to that, but the best instructions that they offer is if you have any tax record at all of, say, additional income, if your P&L, like I think it's your Schedule C on your tax form, where your P&L is, and you have net earnings, or you have any type of additional, like profit from the business, and then any bank statements where you're taking money from the business, or and just really what they're looking for. If you can't show proof of income on a regular tax form, they really want to look if you can find any other type of tax information, bank record, any type of record that shows that you're taking some type of income from that business, even if it's not in a traditional way.
Yeah, unfortunately, the business showed a loss last year, so you know, there's nothing. I realize that, and in fact, I don't necessarily need the money from that thing, and I didn't want to be that person that just takes money.
Sure, but if you're entitled to it, there's no reason why you shouldn't look into it.
Well, what I did instead was the SBA offers this economic injury disaster loan, this EIDL.
Yeah.
It's like $10,000. It's forgivable, and I applied for that. That was easy.
Yeah.
They accepted all the information I
that's
gave
great.
them. So I'm guessing that, according to my accountant, he says I should be able to get that. You know, so that's a $10,000 forgivable loan,
Great. Yeah.
which can go to pay rent and things like that.
Totally.
Which is fine.
Yeah, and that's a smart thing to do, is just look at what's available to you. And I think they're really going to be opening up a lot of paths for business owners that are in your situation and other situations that may not have a traditional like tax form that shows income, or you reinvest some of your income, or you take it and you use it for different reasons, but it's not trackable. I think they're going to open up different avenues for people to just access funds. Again, just to, like you said, like you just need to get through this period, and you're just going to look for something just to pay rent, or just to pay for whatever you need for
Yeah, because I don't want to take out of my own personal, you know, my personal savings to pay for my business. My business rent, for example, you know. So that would be, you know, if I get that, then I'm good. I'm still working. I still have business, so it's that's okay. And like I said, Social Security comes in every month regardless. So you know, I'm doing all right. But
sounds like you're doing all right.
Yeah, I mean, I you know, look, I'll take money if they want to give it to me. You know, but but I don't want to have to jump through hoops and start trying to figure out a way to, you know, to game the system in order to make money.
Exactly.
Yeah. But,
okay, so I'll just move on from this. This is just to wrap up the Paycheck Protection. Applications are being accepted last week through June 30th, or until supplies last. But like I said,
money runs out.
I think they're going to shore it up pretty shortly. There's a bipartisan support to increase or to add additional funds to this program. Again, no collateral personal guarantee required for it. Again, 100%. And if you do, again, this is something for maybe somebody out there who is saying like, okay, I need to cover my salary, but I also was interested in, you know, maybe doing a little bit of investing in the business to innovate or to whatever it is. You know, if you even take this as a loan, it's a very, very low interest loan. It's 1% that's deferred for 6 months and then payable within 2 years. So if it's something, again, I wouldn't like take it out just to have it, but it might be a good way to expand your business and grow your business if that's something you were planning to do, and if it's something that fits. Because it's 1% loan, interest on the loan. It may not be forgivable. The salary part may be forgivable. The other part may not be, and it might be a good way to just kind of like, you know, do some innovation if you want to. So other benefits, I know we talked about, well, one of them is a refundable credit for payroll taxes. Again, if you're a business that can show a 50% reduction in receipts over the same quarter of 2019, you may be eligible to get a 50% refundable payroll tax credit on each employee's first $10,000 of wages. So about a $5,000 payroll tax credit that could help some business owners. There's some expanded business provisions like net operating loss. You could I guess, write that off for 5 years instead of 3 years. And then the hardship loans that I think, Rob, you're talking
Yes.
about, EIDL, Economic Injury Disaster Loan Program. That's another way. And I think, and then the $10,000 loan advance that kind of goes with it. So if you apply for the Economic Injury Disaster Loan, you could also apply for the loan advance. And if you don't get the EIDL full loan, you can still get the $10,000 advance. So that's a really great thing to keep in mind. The EIDL, Economic Injury Disaster, I'm just going to call it EIDL. I think it's a $2 million limit on the loan. It's a 3.75% interest rate and payable for 30 years, but I guess that all depends on you and your ability to pay it back. What I heard from the call is that people who apply for PPP can also apply for the EIDL. You would use PPP for paying for covering your payroll, and then you would use the EIDL to cover your capital expenses, debt, all that kind of stuff. So it's not mutually exclusive. You might be eligible to apply for both. You might just decide to do one or another, but definitely good to know that if you have a business that you're trying to make sure that it kind of, when we get out of this, you're trying to keep it as whole as possible, there's some options for you out there. And then what's next? So we've got additional stimulus. We've got the $250 billion legislation coming through Congress. We'll probably see that. Yesterday, the Fed also created another $2.2 trillion in stimulus. This is something that they're doing through banks. They're facilitating banks making additional loans available, and the Fed is paying 95% of those loans back. So helping to shore up the banks again, to make credit available, to make loans available so people can continue living and working and kind of keeping their lifestyle. Because again, the more that we don't consume, the longer we are in this recession that could go longer and longer and get worse and worse. So I think what they're trying to do to avoid a long recession and then eventually a depression is to keep people working, keep people floating, and kind of build up the reserve so that people can at some point start spending a little bit, and hopefully as we start opening up the economy, we'll have the money and the funds and the businesses to get back on track eventually. Be proactive. Again, I guess I heard from you guys that you are proactive. That's awesome. The best thing to do to get, to get parts of this, of pieces of this stimulus is to ask for it, get involved, be as proactive as you can. The other thing too, I was going to mention is part of the CARES Act was mortgage forbearance. So if you have a mortgage and you are like, I've gotten hit by this, I got laid off, I don't have any work, whatever it is, you can call your lender. Most Ginnie Mae's, Sallie Mae's, all the Sallies and Freddies, they are allowing people to forbear on their mortgages for, I believe, 180 days. Again, you need to call your mortgage. It doesn't extend to rent or other bills, but again, I would say just be as proactive as you can. I know there's a moratorium on evictions in New York State for 2 months or so, but again, be as proactive as you can in terms of revolving credit and debt and with rent. And then speak to your financial advisor, tax professional, whoever it is, whenever you are looking for benefits to kind of clear things up. Definitely just, I think what I was talking to somebody about this yesterday. I think people are saying, this guy was like he was an attorney working for a big company, and then he got furloughed, and he's, we're talking about what is he eligible for, and people have this like feeling of like, am I taking government money? Yeah, take the government money. Like that's what I would recommend. It's like there should be no shame or hesitation with looking into what you're eligible for. This is a period that's unprecedented. I said it, and it's unusual, and it's something that, again, it was created by a policy. It was created by the virus. But then the economic crisis that we're experiencing is a result of the social distancing that we have to do to get rid of this virus. So this is what we have to do in the meantime, and it's available to us. I think it's going to help a lot in the long run. So I hope that everyone takes advantage of what there is. I'm happy to talk to whoever it is, whoever wants to after this. My email is down there. I figure I'm not a nurse. I'm not a healthcare worker. I can't go into hospitals and spend time and try to do as much as I can to help in this crisis. But at the very least, I'm happy to give as much guidance and information as I can to people who are interested in some financial help. So any more questions for me?
Good. Thank you so much.
No, that was great. I'm just kind of curious about this, the EIDL you were talking about. I don't remember when I filled out the application that there was a request for how much money I wanted. Are they going to just contact me and ask me what my requirements are?
Were you looking for the loan or for just the advance?
Well, I mean, I'm happy with the $10,000.
Yeah.
Don't get me wrong, but if they're going to give me, say, $30,000, which would be even better, because then I could, really use it for other business reasons as well.
So the EIDL, the advance is limited to 10,000. It's actually capped. So they're deciding if they're going to decide if you could max at 10,000, you may not even get 10,000. Gotcha. So they're still making a decision as to how much of that they're actually going to, make available to people. So I would just contact your lender and see if they've got any clarity with that.
Okay. All right.
Okay.
Good.
All right, guys. Thank you so much.
Thank
Have a
you.
great
very
rest of
much.
the day. Be safe.
Yeah, you too.
Bye,
Take
guys.
care. Bye-bye.
Bye.
Thanks a lot.
Thank you.